Welcome back to another episode of the Blockchain Brew Show. Today, we're going to live stream Powell's speech, and I'll head over here and see what's going on.
Risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasize the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a makeup strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, and the outlook, we continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
That was Fed Chair Jerome Powell wrapping up his annual Jackson Hole remarks. What a Jackson Hole speech that was. This is Bloomberg Surveillance on television and radio, live from Jackson Hole, Wyoming. What we heard there is they are prepared to move rates lower on the heels of their dual mandate being in conflict. We see a market reaction. We could see 10-year yields are lower by 10 basis points. Two-year yields are down by 10 basis points. So 10-year yields are down by 7 basis points. What you see is a weaker dollar, stronger euro by some 0.7%, which you can see the dollar just weakening across the board, and you can see that increase on the equity space. We have been getting some other news. President Trump has been tweeting saying that if Lisa Cook, Fed governor, doesn't resign, he will fire her. There also was some drama in the main hall of the Jackson Lake Lodge. Bloomberg Michael McKee is with us. Mike, can you give us a picture of what's been going on as Jay Powell was speaking?
Well, it was, I guess, shortly before he spoke, Lisa Cook walked into the Jackson Lake Lodge. She was not here last night. I guess she's just arrived. And James Fishback, who runs Zora Capital, he sued the Fed in court trying to get the Fed to open its meetings to the public, and the court threw that out. But he was standing there and started shouting at her, "Why did you commit mortgage fraud?" He was apparently, according to the Bloomberg reporters who were there, escorted out by sheriff's deputies.
Yeah.
I think we have to be clear here that these are allegations at the
Absolutely.
best, that there are no charges, no process is in place at this time, right?
No process is in place at this time. And what we've seen from Bill Pulte from the Federal Housing Finance Administration and from the president are they're trying to say factually that she committed fraud, and there is no evidence of that yet.
We will discuss that at a later point. Right now, we're just still digesting the text of a 40 to 45-minute speech by Jerome Powell. It really compares to the 8-minute speech back in 2022. There will be pain. This is a complicated moment. The market sees it as maybe a little less complicated. And to really digest what we just heard, Citi Wealth Chief Investment Officer Kate Moore, who's on set with us in her beloved Jackson Hole,
that's right,
Wyoming. And Kate, what's your impression? I mean, how much did what we just hear from Fed Chair Jay Powell change your view of what their reaction function is going to be?
So it hasn't really changed my view. What I will say is, in the last couple of weeks and talking to other people on the buy side and really getting a sense for investors, people were moving a little bit more towards the 50-50 in September, even if that's not what was getting priced into the market. There was the sense that this tension between the labor market and inflation was going to make the decision really difficult. And I think what we're hearing this morning is that, the Fed is on path to start easing rates again or proceed with the cycle. But I don't think that the rest of the meetings to the end of this year and through 2026 are done deals yet. So much is going to be data dependent. So I see the market price moves, and now with near certainty for September and on through the balance of the year. And I think we just have to watch the data.
Right. In watching the data in the Heritage Citigroup economics is Willem Bouter, Catherine Mann out the Bank of England and all. There's a complete international and holistic view. Is this ginormous, that's a fancy word, CFA word, folks, this ginormous investment that we're seeing in AI, is the certitudes of this summer, are they at risk given the tumult?
Well, I mean, tell me, point out something. The market's been really crowded. Most investor segments have been crowded around these secular themes. And for good reason, right? These companies are putting up great numbers. Every company across every industry is investing in AI and technology. So if you had uncertainty around policy or economic growth or geopolitical tensions or international relations or, fractures in the U.S. consumer, everyone was crowded in this space. That said, they're not crowded because these are companies with, they're crowded because these companies have great fundamentals and the path forward looks great. But what we'll have to see as we go into the back end of the year, if we get okay growth numbers, or if we get inflation that's a little bit too perky, if we get rotations in the market. I think some of the rotations in August into the small cap was unwarranted in my view.
So we are sitting here after digesting that speech, and I'm going to have to go read it about 3 more times to really internalize all of the complicated messages laid out by Jerome Powell in his last speech as Fed chair. Mike, before we continue, Michael McKee here, our chief economics correspondent, can you just wrap through some of the key headlines once more so that we can really understand just how big of a policy shift in some ways this really was?
Well, it's a policy shift, but one that has been signaled for a little while, which is why the markets have been buying into it. But Powell basically accepted the market's argument that it looks like the labor market is weakening, and that is a threat to the overall economy. And inflation is rising, but it may not rise as quickly as the Fed had feared. And so therefore, the door is open to a rate cut if we get supportive data from the CPI and the employment report that we get at the beginning of September. Now, the thing about what he said today that I think is important is once you open the door like that as Fed chair, it's almost impossible to close it. It would take a lot in these data points that are coming out to change that view. And the market's going to go overwhelmingly towards the idea of a rate cut. So he's pretty much baked it in at this point. So I think what then happens is it goes to Kate's point about where we go from there. The focus will be on the other 2 meetings this year and then what you do into 2026. And I think if you ask the chairman, he would say, we don't know yet. That's the data dependent part. But for right now, we're going to give you what you think you need.
And right now, what you are seeing is almost a certainty priced in for a rate cut next month. But Kate, one other thing you're seeing is weakness in the dollar on the heels of this.
Yeah.
Do you expect that to be very much an ongoing theme? And it just kind of edifies it, given that this is taking the more dovish approach.
Yeah, we had a pause in terms of the weakening of the dollar after a really vicious weakening in the first part of this year. And I've heard a lot of currency strategists say, we're going to tread water for a little bit. We've made a lot of the adjustment. But if the market really believes with high conviction that we're going to continue on a rate cutting cycle, I think it's fair to assume that the dollar would weaken a little bit. I think most people would say over the longer term, they agree that the dollar has been overvalued for a considerable period of time. And I expect that we'll see a little bit more of that adjustment. On balance, though, I think we're going to see appreciation in some U.S. assets, particularly the U.S. equity space, even as the dollar weakens a little bit. And I'm hedging some of the stuff and some of the concerns I have in the portfolio around uncertainty and perhaps pick up in volatility in September into the beginning of October with a little bit of gold.
Interesting. We'll catch up with Kate Moore. She's going to be sticking with us, Citi Wealth Chief Investment Officer, as we get through all the headlines and get some commentary. Joining us now is someone who is very familiar with these types of speeches, St. Louis Fed President James Bullard, who recently was in the media talking about his preference for 100 basis points of rate cuts this year heading into 2026. Also potential contender, I should say, to be the next Fed chair. Jim, how much are you seeing what we heard from Fed Chair Jay Powell and seeing anything different that you would really say if you were at that podium?
He used the speech to solidify expectations for 25 basis points in September. I was expecting that anyway. Markets were expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's a done deal. He didn't say too much about beyond that, what you want to do with the October meeting or the December meeting. I have said 100 basis points, going into 2026. So I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data. And then on the framework review, I'm sure much earlier in the year, they had targeted that they would have the framework discussion and that they would use the Jackson Hole speech to talk about changes to the framework. I thought those were thoughtful and they were well presented in this speech, and they're about what many have speculated on. So I think they did about as much as they can on the framework side.
Jim Bullard, Tom Keenan, good morning to you. I definitely consider this my conversation of the day. You served a lengthy term at the St. Louis Fed. You have lived the decline of a greater economy decades and decades ago in the effort to provide for a resurgent St. Louis. Is the next chairman of the Fed, whoever that may be, do they have to manage for two American economies, a technology-driven, exceptional economy, and another, to use a cliche, America flat on their back? How would a chairman execute those two Americas?
Everything all the way around.
Yeah, I think income and wealth distribution have become more salient topics for the Fed. It's not that clear how much the Fed can really do. Providing interest rate policy for the whole economy. If you change the rate structure, that affects everyone, not just one particular group that you might be targeting. So I think that's been something we've had to wrestle with, and I've actually done research on it myself to try to understand it better from my point of view. So I think this has been a theme for a while, and that'll be an important theme in macroeconomics going forward.
Mike McKee's got a lot of smarter questions than me on the immediacy of this speech. I'm going to ask one more distant question, Jim Bullard. You're at Purdue executing online technology education every single day. How do you define the new technology productivity that America faces? Is it enough to save us? Is it enough to really add on to our present GDP?
Oh, yeah, I think that the AI boom is, it's a general purpose technology that will diffuse through the economy. I think the key question is how fast does that actually diffuse? And sometimes markets can get ahead of themselves and think it's going to happen sooner. Sometimes they're too late, and it happens faster than markets think. But nevertheless, any way you look at it, it's an important technology. It can drive productivity. And I think in higher education is one of the places where you can really have the biggest impact. We put a AI requirement in at the Daniels School here for every single student, and we're trying to expand that to all of Purdue. So I think that just shows you how important this technology is.
Jim, it's Mike McKee. I have a question about sort of the process involved in this speech. The chairman is giving his own speech, but basically when he says it's time to maybe adjust policy, he's speaking for the entire Open Market Committee. Going into a speech like this, would he have polled everybody? Does he think he has the votes for that? Because we've been speaking with Fed officials here in Jackson Hole, and there are still some who are saying, well, we're not sure that we need to do that yet.
Yeah, he's going to report on the center of gravity of the committee, even though there might be people that have misgivings. At the June meeting, the committee had a median dot plot of 2 rate reductions by the end of the year. And I think the minutes, suggested something that was more like 50-50, but then the labor market report came in. I think that tilted the balance. So he could have pushed back a little bit. I think financial markets were expecting him to be a little bit more hawkish here and try to set up a 50-50 meeting where you would wait and see for the rest of the data to come in. But I don't think that's where the center of gravity is on the committee. So he went ahead and leaned in. I thought there was quite a bit of talk about the labor market at the beginning. You could have been a little more, a little more emphasis on the low unemployment rate, for instance. And he did come out at the end of that discussion saying, "Well, it's in balance, but we're a little bit nervous." So I think, I think he's accurately describing where the bulk of the committee is.
Where would you be on this question? Because we've heard the Fed officials for some time now saying, yes, we had poor job creation in recent months, but the unemployment rate, as you just mentioned, has been low. And they've described the labor market as solid. Now, this seems to be sort of a major shift in the way they view the outlook and the sort of balance between the two mandates.
Yeah, what he did at the end of that discussion, he said, well, it's in balance. But I think the committee's nervous. I think it has been slowing. And I think the policy rate is moderately restrictive. It's maybe, 125 basis points above the neutral rate. Is that really where you want to be in this circumstance? I think the answer is no. So you can come down some and still have moderately restrictive monetary policy that puts gentle downward pressure on inflation. And then the other thing that I think has happened is that this argument from Chris Waller and others on the committee that you should look through the one-time increase in goods prices coming from tariffs. I think that's carrying the day. And, then he emphasized that inflation expectations remain anchored and so on. And so I think that sets up a modest move downward in September.
Jim, we've been talking with you for years, and you are very focused on the discipline of economics. Right now, I'm looking at the headlines that are crossing from the past hour. The top one.
Okay, so before I hop off of here, I wanted to experiment, to be honest, with streaming Jerome Powell live. And I think what I'm finding is that, streaming a big event like that, all of the biggest YouTubers are also doing that. And I think all the views are going over there. However, I'm going to do this little top-down analysis right now on Bitcoin so that anyone coming to this video later will be able to look back on this analysis. So here we go. Let's get into the charts. I'm going to zoom out to all the way to the 1 month. Reset chart view. And so nothing has really changed about this on the monthly chart, right? We see a break of a break of this inverse head and shoulders. It's actually on the weekly. And right now we're seeing 1, 2, 3, 4 months, 5 months of green candles. And this still yet to close. The candle opened $115,764. And so we'll have to see where it closes. What I'm hoping for, honestly, is a very slightly red candle, only because it makes me think that we can get a few more green candles after that through the rest of the year, right? Like if you come back to this move and you count how many green candles we got in a row, we got 1, 2, 3, 4, 5, 6 green candles in a row. Maybe we can squeeze out 7 or 8 or 9, but right here we've already gotten 1, 2, 3, 4, and this is about to be 5. So if September is 6, that means a bullish October, November would be putting us at like 8 green candles in a row, and I don't know if we've ever done that before. I mean, maybe I can go to the Bitstamp chart. Let's see here. Bitcoin US dollar on Bitstamp. 2, 3, 4, 5, 6. See, if you look right here, 1, 2, 3, 4, 5, red candle, and then that allowed us to get another 3 after that. One, 2, 3, 4, 5, 6. Steve, Bitcoin has never more than 6 green monthly candles in a row. So I don't know what's gonna happen between. Bitcoin has also never had a bullish August and September. So hey, what's up, John 316? Yeah, Bitcoin has never had a bullish August and September. It's also never had more than 6 green monthly candles in a row. So my honest hope is that, I don't know, given the news that we just got that a rate cut is likely, I don't know what's going to happen between now and the monthly close to make us red. Hopefully it's just normal market action that comes down and dips us a little bit below $115,700 for Bitcoin, and we get a very slight red month, technically. That's what I'm hoping. Bitcoin never also broke all-time high before the halving. That's true. There's no reason it can't happen. But we would be getting, 7, 8, maybe 9 green months in a row. It's just a lot. I don't think we would get any more than 9, because the TD sequential sort of says that, hey, any more than 9 green candles in a row is overheated. So I don't know. It would be nice if we could close just a hair under $115,700. After the news that we just got, I don't think that's going to happen. I think we're going to pump. And I don't know. I guess here's the thing. If we pump, I don't see why we don't close September in the green as well. Because September is when we would actually get the rate cut. Unless we just go so high that September 1st opens high enough to where a natural retrace brings us, well, he did not say September exactly, but he did say that he did signal a shift in policy. He basically said that the job market being overheated, the job market being weak is a reason to go ahead and shift monetary policy, because he doesn't want unemployment getting out of control. So he signaled that shift. He basically said it's coming. When the Fed chair opens that door, they can't close it because all the markets are pricing this in now. And if we get a rate cut in September, I don't see how we get a red September unless we sort of open so high on September 1st that we have to, that a natural retrace would sort of dip us slightly into the red, and then we continue up from there in October. Maybe that's how it can happen. So I'll come back down to the weekly. And come back over to this chart to do it. So here we are in the weekly, and we've held this this neckline here. We've bounced right off of this neckline of the inverse head and shoulders at $112,000. The neckline is actually down here at just over 111, but we've held critical support at 112 and bounced from there. So this inverse head and shoulders pattern is still very much in play until something convinces us otherwise. The target of this inverse head and shoulders pattern is all the way up here at just under $170,000, about $168,776 for Bitcoin. I come down to the daily reset chart. So here we are. We're bouncing, like I said, off of critical support that we found at $112,100. And we've remained above the neckline of the weekly inverse head and shoulders at, you could call it 110 actually. So we've had this bounce. We've also broken a downtrend on the 4-hour that I'll show here in a second. The histogram on the MACD on the daily has moved from red to neutral. So this means that we could watch for the MACD start to make a rounded bottom and cross bullish again. The RSI, we saw this W pattern. Okay. And the stochastic is looking to reverse right here. The blue line is crossed above the orange line, and we are looking for a move back up on the stochastics. Now, what's nice about this is that Bitcoin is at $116,000 as we speak, and the stochastics are still very, very, very low, meaning that we're technically, on the daily chart, we are oversold even at $116,000. So that's a very great sign for Bitcoin bulls. Let me make sure I keep up on the comments here. Okay. Coming to the 4-hour. So we've broken a long-standing downtrend on the 4-hour chart since this downtrend has been in play since August 14th. So since Thursday, August 14th, we've been in a confirmed downtrend on the 4-hour chart. And today, this candle that we're getting right now has broken above that downtrend, and it's broken above the 21 period moving average on the 4-hour. It's also inching above the 50 moving average as we speak. If we get above the 200, which is coming in at $116,900, we get above the 200, I believe that it's open doors to a new all-time high. If we get above if we close a candle above the 200 moving average, I think that it's a clear sign that we take out these highs before we take out these lows. We also have a bullish cross on the MACD, call it by its government name, the moving average convergence divergence. Bro, what was the result of Powell's speech? Can we expect a cut? Yeah, so Powell spoke, we streamed it live, and Powell basically said that concerns about the job market, concerns about rising unemployment, the Fed has a dual mandate, right? To maintain prices for consumers, to maintain stable prices for consumers with a target inflation rate at 2%. Okay. Now, the other part of the dual mandate is to achieve maximum employment. Okay. Maximum employment. And for the Fed to achieve maximum employment with a concerning job market right now, yet inflation has remained very stable for most of the year, Powell basically said that the job market right now is reason enough to cut rates. He did not use the phrase cut rates. He said shift policy. That's Fed speak for cutting rates. So it's Fed speak for cutting rates or raising rates depending on which direction you're in. But in response to a rising unemployment, then a shift in policy means cutting rates, which is, just look at the market right now. This big green candle that we're getting right now on the 4-hour chart is the market pricing in a rate cut in September. Basically, it's bullish till September 17th, though. Exactly. And by the way, if this is your first time joining us on the channel, we might not be the biggest, the best, or the brightest crypto community on YouTube, but we're definitely the most hydrated crypto community on YouTube. Usually, I would show you my beer as I say that, but it is 8 o'clock in the morning for me right now. So instead, I have a Monster. I'm probably about to have another one. I'm going to have 2 white Monsters, and I'm about to create a third. So there you go. But YouTube, for sure. Thank you. Yeah, so that's where we're at. I come back to the charts here on the 4-hour. Like I said, getting above the 200 moving average is going to be a clear sign that we break these highs before we break these lows. We are not overheated. We are not overbought yet on the RSI or on the stochastics. So this pump can continue to run for a little while on the 4-hour before having to cool off. I suspect that we actually get another green candle after this one closes, right? So we would get, let me come try to find an example of this somewhere. I don't know, I'd have to go back pretty far, but I suspect we can get maybe we close, let's say just we close somewhere around here, right? I think we can get another, okay, that looks nothing like a candlestick. It was about to look more like a penis than a candlestick. Anyways, I suspect that we can get another green candle close after this one because we're not overbought yet on the stochastics or on the RSI. And look at what the stochastics are showing here. It took a little while to confirm. I drew this last night on the RSI, a bullish divergence, right? I'll go ahead and I'm gonna actually just remove all of my drawings and I'm gonna redraw it for you. So last night I showed that we had a bullish divergence coming in like this, a swing down on the price, and last night it was only drawing to there, right? A swing down on price with a swing up on the RSI. That's bullish divergence. What it means is that as the price is going down, the momentum is not going down as far. And what that tells you is that you don't have the momentum necessary to sustain a further drop, right? That's bullish divergence. And so I drew that last night, and while we were asleep, this came in on my stochastic indicator. The stochastic indicator that I use, if you want to search it on TradingView, is the Stoch RSI with divergence. There it is, stochastic RSI with divergences. So the indicator actually shows the divergences for you. However, it shows it to you on the Stokes, not necessarily on the RSI. So right here, this was a bearish divergence on the RSI, right? We had a swing up on price with a swing down on RSI. And it signaled this move right here. The stochastics did not show a divergence. So you have to take both of them into consideration. But right now, the stochastics are showing a bullish divergence, but I actually drew this on the RSI, last night about 12 hours before we were seeing it here. So for what it's worth. Let's see. And we have this bullish cross on the MACD on the 4 hour with a big green candle on the histogram. So we're looking very, very, very good right now. On the 1 hour, see that this is what I mean right here. Okay, on the we got this big green candle right here, but we're starting another one, right? RSI is at 74 on the 1 hour. That's still not that overbought. It's getting overbought, but it's not terribly overbought. And the stochastic on the 1 hour is also not overbought at the moment. And we're breaking right now above the 200 moving average. This hourly candle just opened at 8 a.m. Pacific Standard Time. And so we have a whole hour ahead of us for this candle to close. And if this hourly candle closes above this 200 moving average, then what we do is we start looking for a close above the 200 on the 4 hour. So first things first, we have to close this hourly candle right now above the 200 moving average. And that to me would signal, it would be further confirmation of a reversal. Coming down to the 15-minute. So here on the 15-minute, we are getting very oversold on the RSI. at 85. We can get a little higher than that, but look at the Stokes. They're very oversold as well, and they're overbought. I mean, we're getting overheated, overextended, overbought. The stochastics are overbought as well, and they're so overbought that they're actually just flattening out. So something's got to happen on the 15-minute, and they can stay this way for a little longer, don't get me wrong, but something's got to happen on the 15-minute to give us a bit of a reset here. Now, what I am looking for on the 15-minute is for these moving averages to cross. Specifically, I want the white line and the yellow line to cross above the red line. Right? I want the 21 and the 50 to cross the 200. And particularly the 50, the yellow line crossing the 200 would be a golden cross. Although it's just on the 15-minute, it's signaling what can begin to happen on the higher time frames, that we get a close above the 200 on the 1 hour, and then we can start looking for the 4 hour. So let me go down to the 7-minute. Okay, so we did get that golden cross on the 7-minute, and the stochastic. Okay, see how I said on the 15-minute, the stochastics are flattening out right here, but they can stay that way for some time. Look, the 7-minute is an example of that, where it's been flat for a little while now. Now, things are sort of running away from the 21 moving average, and the 21 is like a magnet for price action. So at some point, the price has to flag out, move sideways, or dip long enough for the white line to come up and meet price action in the middle. Okay. Let's go to the 5-minute. Okay, the 5-minute is an example of this. See how any time that the price moves sideways, it's an opportunity for the 21 to come up closer and meet price action. That's what we want to see. The 5-minute is showing a bearish divergence on the stochastic, which is good. Really, we want to see this momentum come down without the price falling off of a cliff. We want the momentum to be able to come down even in the middle of sideways and slightly up price action. Once the momentum comes all the way down here, it's a full reset, and we have the momentum that we need now to continue up. And finally, let's see what's happening on the 1-minute. And the 1-minute is hugging the 21 moving average. And yeah, I mean, everything's looking good on that. So that's where our top-down analysis on Bitcoin for this morning. We've looked at everything from the monthly chart down to the weekly, the daily, the 4-hour, and the smaller time frames. So John 3:16 says Crow is on the move. Let's go look at it. Crow USDT. Yeah, man. Look at that. Reset my chart view. Yeah, that's an important break for Crow on the daily. Is this 21 moving average right here. And look at how it held a higher low. Right there. That's very, very important. We had a high and a low, and then a higher high and a higher low. So Crow on the daily for me is in a bona fide uptrend on the daily. Not only that, Crow has yet to put in a bullish cross on the MACD. Right down here. The MACD has yet to cross bullish, and the histogram has yet to turn green. Also, the stochastic is all the way down here at 27 on Crow, on the daily. Meaning that the Stokes have this entire move ahead still on the daily. So this pump on Crow, in my opinion, looking at this chart, is just getting started. So that should that should make you happy, John 316. Let's see. If anyone else wants me to go over a coin, go ahead and let me know, and I'll cover the chart. If no one has anything, then I'll jump off. But he said we were gonna get blessed. Yes, sir. I'll go down to. I'll look into Crow a little bit more here on other time frames. The weekly. Okay, so the weekly is just now breaking the 200 moving average, which is a very, very, very important level to break. And it broke 2 weeks ago. We had a red week, but that red week did not close underneath the 200 moving average. We've wicked below it with all of the bearish action we had this week, but now we are back above it as we speak. So what you'll be looking for on the weekly, in the weeks ahead, is you're looking for the white line and the 50 moving average, the yellow line, to come cross above the 200. That's a golden cross. Technically, when any smaller time frame crosses above a higher time frame, it's a golden cross. But the most significant one that people usually look for is the 50 to cross the 200. So the 21 will cross first, and then the 50 will cross. So once these two moving averages, the white line and the yellow line, once they cross the red line up here, you have a golden cross on your hands for the weekly chart on crypto.com. So, point being, that still hasn't happened. That's still ahead of you. And you have a whole lot left in the tank for this run on Crow, is what I'm getting at. You come down to the 4 hour. Thanks, Trent. You're welcome. You're welcome, John. So on the 4 hour, we were approaching danger, right? Everything was. This was the whole market. We were approaching danger on the 4 hour, and the danger was signaled by dropping above this 200. Dropping below this 200 moving average, because that can lead to some very big volatile moves. However, we had this very important level of support underneath us that we bounced off of. And right now, we're back above every moving average on the 4 hour. So we're also not overbought yet on the RSI on the 4 hour. So this green candle right here, there can be a few more of these to come on the 4 hour before you cool off, in my opinion. Also, the MACD on the 4 hour for crypto.com is looking to cross above the 0 line. the blue MACD line is looking to cross above the 0 line, which is a great sign for momentum. And if we come down to the 1 hour, we've had a very powerful break above the 200 moving average on the 1 hour. RSI is starting to get a little overbought, but that's fine. It can cool off. Also on the 1 hour, this is like what I showed on the weekly. The 21 and the 50 have yet to make a golden cross above the 200. So that is going to be happening here over the next several hours, in my opinion, as you can expect crypto.com to make a flag here. And the flag is going to do one of three things. It's going to go literally sideways, in a range, and it could be like a broadening range as well, right? It could in there, or this is the less likely scenario, but it could make a flag that sort of points down like that, okay? Or it's going to flag out with the flag pointing up. I tend to think that we're probably going to see like a broadening. Either way, we have to make some kind of flag over the next several hours as we wait for the 21 to move up. Also, I mean, look, it very well could do that. Price could very well keep going up and then start to move sideways, right? But we have several more bullish hours ahead of us for Crow, but the RSI has to cool off and the 21 has to come up to meet price action before it can just rip like that, in my opinion. So there you go. There's Jim Saul says Ondo. Got you. Let's see here. Ondo. Zeno, what is up? Okay, coming at you with the Ondo chart. Ondo is one of the coins that I'm most bullish on in this market. Okay, so Ondo right now on the 1 hour, putting in a break of the 200 period moving average, the 200-hour moving average. We are also not showing extreme overbought conditions on the RSI, and the stochastic RSI still has plenty of room to move up. The histogram has turned from red to green on the MACD. Call it by its government name, the moving average convergence divergence. So there we go. 1 hour looking good. Let's go to the 4 hour chart on Ondo. And if you give me literally 2.5 seconds, I'm gonna go grab myself another monster out of the fridge if you guys can exercise the patience with me. So I'll have had 2 white monsters and I'm about to create a third. This isn't my third monster. I mean, this is my second, and 2 white monsters are about to create a third, and I'm going to be the third. Okay, so Ondo on the 4-hour chart. It has not yet broken the 200 moving average on the 4-hour, but I do expect it to break today. The reason why is because we're not overbought on the RSI. We're definitely not overbought on the stochastics, and the MACD just put in. Technically, it didn't cross. Technically, it crossed back here, and it just bounced in the right direction right now. But still, that's a bullish signal on the MACD, coupled with a strong momentum on the histogram here. So there's still a lot of momentum ahead of Ondo on the 4-hour, and we have this double bottom pattern that came in here, showing very strong support, and a break of a downtrend that has been in play since August 14th. So I'm going to remove all of my drawings from the Ondo chart. So it's looking very good to me. I expect a break of the 200 moving average to happen today. And in terms of targets, look, we've broken that downtrend. So look, what you have to start asking yourself is, do we break this high before we break this low? And to me, the answer to that is yes, because we've broken a confirmed downtrend that has been in place since August 14th. So if I'm trading this, okay, my stop loss being at 89 cents. Am I okay losing that much on the trade? So look, I mean, if you're going to put in that means that you can't put in a 10x leverage trade. Look, you could. Like, I'm just being very conservative right now, okay? You definitely could. White Monster, my favorite too, sugar-free. Yeah. That's right, Zeno. Jim Saul, thank you, Trent. No problem, man, no problem. So, look, I'm just showing you what I think when I trade. And this is pretty conservative. So, I wouldn't want to put in a 10x here, because my liquidation price would be 9.8 cents lower than the current price. So, you know, I'm thinking to myself, do we break this high before we break this low? I think the answer to that is yes. So if I put in a 5x leverage trade, meaning the price would have to go down by 25% to liquidate me. See, you have to, at the end of the day, you have to put your stop loss with at the point where you're comfortable losing the money. So there's 2 ways to hedge against risk here. Number one, you use a tight stop loss. Okay, and then you have to start asking yourself, we can certainly retrace anywhere in this range. I mean, we can retrace here, or we can retrace here. You know, so there's two ways to hedge against risk. You put in a tight stop loss, or you trade with an amount that you're okay with getting liquidated on. So if you're okay putting in $1,000 trade on this because you've been winning in the market and you're okay with losing that, then you put in your $1,000 trade. You don't run it with a stop loss. I know that's crazy to say. And you put it in at 5x or maybe 6. I wouldn't suggest going over that, but you put in a 5, 6, 7x leverage trade. And the bet that you're making is that you're going to break this high before you break this low. And then what you do is you say, if you're going to break this high before you break this low, then it means that you're also going to break this high. Right? So that seems obvious, but my point is, this is your first take profit level at $1.03 or $1.04, right? So there's your first take profit level. And then what you do is now you move your stop loss right underneath the 200 moving average. So now you can't lose the trade, right? That's just me. So your first take profit level, maybe you close 25% of your position at $1.03, and your next take profit level is literally this high at $1.10. So that's how I would be looking to trade Ondo right now. If we go to the daily, and I'll remove all of my drawings so we start fresh. If we go to the daily, we are back above the 200 moving average, so that's a great sign. A couple other great signs: you have this W pattern on the RSI. See how it made that W there? Also, we have bullish divergence on the stochastic RSI, signaled right here. The histogram on the MACD has turned from red to neutral, which means that we're going to start rounding a bottom on this MACD, and we're going to be looking for a bullish cross on the MACD within the coming days. That's what I see happening. The stochastics are also low for Ondo, meaning that you have all of this room ahead of you still. You have more momentum ahead of you than underneath you for Ondo on the daily chart. So that's a great sign. Weekly, I mean, I need a chart with more data on it than this, so I'll stop at the daily, but there we go for Ondo. If anyone wants another coin, just go ahead and drop it in the chat. And while I wait for that, I'll go ahead and hop over to X, share this tab instead. Go to my profile. Zebekin, please. Got you, John. Also, Jim Saul, if you're still here, I'm in from 90 cents, stop loss at break even already. Excellent job, Jim. Jim, are you already subscribed to the channel? I feel like I've seen you here before. And so that's great to see anyone winning, but it's especially great to see a member of the Brew Crew winning. If you're not subscribed, smash the like, sub to the channel. YouTube is a hard grind where we might not be the biggest, the best, or the brightest crypto community on YouTube, but we're definitely the most hydrated crypto community on YouTube. And I say hydrated because we usually live stream in the evenings and we're usually drinking a beer when we do. So there you go. 90 cents, that's an amazing entry, Jim. Stop loss at break even. With a stop loss at break even, I would let that trade run for a while. And speaking of trades, come over here on our X, and if you're looking to open another trading account and move any funds over, we have this new user deposit bonus event with BYDFi running right now. So you can get new user deposit bonus event, get $2,000 bonus, no minimum trading required, only deposit to your crypto futures account. So you deposit $100, you get a $50 bonus. You deposit $500, you get a $100 bonus. Deposit $1,000 for a $200 bonus. And then for larger traders, it's a 10% bonus rather than a 20%. So for a $5,000 deposit, you get a $500 bonus. You get a $1,000 bonus on a $10,000 deposit and a $2,000 bonus on a $20,000 deposit. So the way this works is that there's no minimum trading volume required. You'll notice a lot of the, get up to 8,100 USDT and bonuses. A lot of those require you to meet very exorbitant levels of trading volume in order to get the bonus. With this, you just get a bonus for depositing. You make your deposit, hold your deposit through the end of this event period, which ends on August 27th. And you won't have to wait until then to get your bonus. But if you withdraw it right away, they might, I don't know. I don't know what it's safer to just hold it through through the end of the event. And then once the event is done on the 27th, you can absolutely just take your deposit off if you want to and trade with the bonus that you're given. So very generous deposit bonuses here. And with our link, you get VIP level 2 access for 20% discount on trading fees. So there you go. And John wants to see some Zebekin. What's up, Muffhead? Good morning. Rise and shine. What did you miss? Well, you basically missed Jerome Powell signaling a rate cut at the Jackson Hole event. He said that, in essence, that inflation is low enough and stable enough for job market concerns to warrant a rate cut, to warrant a shift in policy. in monetary policy. So the markets right now are pricing in a September rate cut. Let's see. Let's chart some Zebekin for John. Share this tab instead. Let's see here. Okay, Zebekin. On the daily chart, the stochastics are moving up. That's a good sign. The RSI is neutral. The histogram on the MACD is moving from red to neutral. The MACD line can start to round a bottom here and then cross bullish. So all of those things could still be ahead of you, which is a good position to be in. So far, we've bounced off of the 50 moving average. We need to get above the 21 to confirm to resume an uptrend here. You know, we had this double top come in over here before we started to trend down. And I do see this as a falling wedge. I do see this as a falling wedge. So, you know, I think we have that break here of this falling wedge, and that's a good sign to me on the daily. If we go to the 4 hour, we're above the 21. Momentum is above us on the stochastic RSI and the RSI. The MACD is looking to cross the 0 line pretty soon on the 4 hour. That's a good sign. What we really need here on Zebekin is to get above and stay above this 200 moving average. And I wouldn't, I know you're not really into trading, John, but I'm just saying for anyone out there, I wouldn't really trade this until I see that. Until I see the price get above and stay above the 200 moving average. So. Jim Saul says, yes, I'm Brew Crew, caught some good trades here on Zora and Tron from T-Square. Hey, nice. Good work. Excellent entry on Ondo too, man. That's good work on that. Proud of you for that one. You know, I really want this community to be known for winning. Like, I would love to see a day in the future where, you know, everyone can, you know, send us their closed trades in the Discord. By the way, if you're not in the Discord, feel free to join us over there. We put out signals every day over there. But yeah, I would love to see a community of you know, hundreds or thousands of people that are, on average, we're winning as a community. That's the real sign of success to me. It's a reflection on me and T-Square. I truly believe it's a reflection on us if our community wins. See, if we win in crypto, but our community is watching our streams and then hopping into losing trades, right? If a bunch of people go trade with our link and I go in and I can't see personal information. Don't worry, but I see user IDs and I see closed trades and ROI. Right, I want to be able to see that stuff because people can sign up with my link and start to trade, and yeah, I'll make commission money in the short term. But what if everyone is out there blowing up their accounts and losing their trades? I don't want that. Even from a business perspective and a profit perspective, I don't want that, because people aren't going to keep trading. You know what I mean? And if people keep trading because they're winning, then I have a steady stream of income, you know, coming in through commission. So look, I want this to be a winning community, and it doesn't do me any good if a bunch of people go sign up with my link and maybe I make some quick money, but then everyone's losing. That doesn't do me any good. And, you know, so I would, you know, my long-term goal is to build a community where it's obvious that the community is winning. I don't want it to just be obvious that me and T-Square are winning. I want to build a community where it's obvious that the Brew Crew is winning, and that's going to send a message, the kind of message that I want to send out there. So, anyways, where was I at? 4 hour. Yeah, until we're above that 200, I wouldn't really want any part of a trade on that personally. Okay, 1 hour is above the 200. That's good. MACD looking to cross the 0 line. So I do see a higher high coming on the 1 hour. I do see us breaking that high. Right? Again, this is always my logic. Are we going to break that high before we break this low? And I think the answer to that is yes, because the MACD is about to cross the 0 line. We still have momentum above us on the Stokes and on the RSI. And in order to break this low, we would have to fall through every moving average. And on the daily, I believe we've broken out of a falling wedge. So, look, I do believe when I say that I don't want any part of this trade until we get above the 200 on the 4 hour, the 1 hour shows me that is going to happen. But me personally, I would just want to wait to make sure, if that makes sense. So that's what I'm seeing on Zebekin. And I'll hang out for a few more minutes just in case anyone else has a coin that they want me to look at. And while I wait, I'll come over to Twitter for a moment. Let's just hang out and scroll Twitter together, see what the most degenerate space out there is saying. Let's see. The Bible names 8 foods that contain God's medicine. I've eaten these, grown these, raised my boys on these. Watermelon. I mean, I don't know about it containing God's medicine, but I do love watermelon. Okay, so look at this. The Fed Watch tool is back at a 91% odds of a rate cut in September after Powell spoke at Jackson Hole. So Why has it got to be called Jackson Hole, by the way? I get that's the name of the city, Jackson Hole, Wyoming, but I'm just like, why are we talking about Jackson's Hole so much? Cardano to break all-time high before December. I do think that's going to happen. Just in his much-anticipated speech, Powell highlighted job market worries, which opened the door to rate cuts. Powell said the balance of risks appears to be shifting. September rate cuts locked in. You know, once the Fed chair opens the door to something like that, it's very difficult to close it. Muffhead says near. Thoughts on exit targets. I'll look at that in just a second. I'll try to give a few more minutes for a couple more coins to roll in. Also, I just realized I am not even sharing my screen. Share this tab instead. So, yeah, that's what I was reading right here. Is Powell talking about rate cuts? Yeah, once the Fed chair opens the door to a shift in monetary policy, it's very difficult to turn around and close that door because the markets have now priced everything in. Aletheia, got you. Here's what Sammy Cup and Handy, Crypto Lifer. He says weekly closes in 2 days. This was before we got the. Did he delete this post? I mean, no shade on Crypto Lifer. I love Crypto Lifer. But did he delete this post? Because this was before Powell spoke and everything pumped. Said weekly close in 2 days, sitting at 114K support, could point to 109K. 5 day shows a bearish engulfing. 3 day lost the 21 moving average, and daily failed to bounce. Plus closing under 112.5. These are bearish signs. Also, inverse Adam and Eve on the daily suggests Bitcoin may go lower. But when you go to click on it, it says this page doesn't exist. And if I go to his profile, yeah, he posted that 2 hours ago. I think he deleted the post. Which, I don't know, I'm just thinking to myself, like, why would you delete the post? Just go edit it and update it. And show that new data has come in. I don't know, that's weird. Again, no shade. I think that he's one of the best on crypto YouTube, but I don't know. Today, Trump to make major announcement. Yeah, I forgot about this. President Trump will deliver a major announcement from the Oval Office today at 12 p.m. Eastern Time. That's 9 a.m. our time. So maybe I'll stay on here to see what happens with that. Kanye's Yeezy token. Man, it's plummeted 75%. I mean, there's no way I would have ever touched that, to be honest. Okay. Let's look at some more coins. Near and ethereum. Okay, near looking good on the 4-hour. MACD looking good. Stochastic and RSI looking good. We have some room to go before we break the 200, and I'm probably not too keen on a trade until I see that. See, the 1 hour is trying to break it right now, so I need the 1 hour to break it before I consider anything. If I go to the daily, same thing, the daily hasn't even, gotten back above it yet. However, there's nothing but momentum above us on the stochastics. Near is just lagging a little bit. And the reason why I wouldn't open a trade right now isn't because I don't think it's going to move up. It's just simply because it's lagging, and I think you can still spend some time lagging on it while you could be going up on other trades. So yeah, that's what I think for near. Let's see, ethereum. What's the ticker for ethereum? Oh yeah, there it is. Okay. Ooh. On the daily, the 200 is still all the way up here. So it's got a lot of work to do. Look, I mean, the RSI and the stochastics have both crossed bullish. Yeah, no kidding. I've seen this before. You say it's the hardest coin to chart, and it kind of is. Let me take the MACD off of here so I can put the VRVP on. And that's not showing me much either. 4-hour. Yeah, it's still not showing me much. The stochastics are pretty high on the 4-hour. Let me get this VRVP off of here so I can add the MACD back. MACD is looking to cross the 0 line on the 4-hour. I just don't like that the stochastics are already so high. Man, that's a hell of a drop from up here. I mean, and it made a high, and then it took out these lows before it took out this high, and that's just a really rough place to be in. Now we have to ask ourselves, is it going to take out this high before it takes out these lows? And the answer is probably yes, if the rest of the market is bullish, but I just don't like this. I don't know. Okay, on the 1 hour, we are above the. Okay, here's what I would say. The 1 hour looks good, but the RSI is overbought. If this can signal that it's going to stay above the 200, and if we get the white line, the 21 and the 50 to make a golden cross above the 200, then I would consider that ethereum is out of the danger zone. See, but even then, you would have to be a little risk averse to a high leverage trade, because by that point the price could run up here, and then if you're leveraged too high, all it needs to do to liquidate you is dip back down here, you know. So I don't know. There's plenty of other coins to trade that are easier. I wasn't even showing the chart. Sorry about that. Okay, well, I think that does it for me for this morning. I will update on the Discord if we hear anything from Trump, and be blessed. Cheers.